All right, I'm just gonna start. Again, if anyone else does decide to jump in at any point in time, I can stop, answer questions. I'm probably gonna take like 3 or 4 minutes and kind of just give my overview on what exactly it is that I'm seeing in the overall markets, as well as what it comes to when it comes to the price of direction of the overall market, and of what I'm seeing not only inside this room, but on social media as well, from many different outlets from traders. I'm going to record this again, so this will be posted in the main room, as well as probably go somewhere posted in one of these channels as I go along anyways when I'm finished. So I'm going to first start off by kind of identifying what exactly is going on in the market right now. So the last 2 weeks, if anyone has had trouble making money in the last 2 weeks, you're having trouble getting stopped out, you're having trouble not really making a lot of money, or getting into trades and it doesn't seem like they're working, or you're getting into what looks like a good level based on a 20 SMA play, I don't care what time frame we're looking at, based on an opening range break, whether it's a pre-market level break, an after hours session break, or a previous day break, and it's confirming you're getting in and then you're losing money because it's turning around very quickly. There's a reason why. So the reason why is the market as a whole is in a level of distribution. Okay, so what distribution is a battle between bulls and bears, obviously trying to figure out where the next directional macro move is going to go. If you look at the daily chart here, and again, this is not the big chart that's got all of the levels on it, because we don't really need to see that. All we need to really look at is just the candlesticks, use our eyes, be adults, and be realistic as to what we're exactly looking at on the charts. If we kind of go back in time to the last period of distribution, starting on the 11th of September all the way to the 15th of September, this period of distribution lasted 1, 2, 3, 4, 5 days before it was finally broken, consolidated, and then continued to flush. This was your big move coming out of this period of distribution. The point that I'm trying to make is that the longer the move goes sideways, which in this case was 4 or 5 days, you can see the bigger the move. What I'm getting at here is that this market in the last 2 weeks has been going through a period of distribution. So what's the next move to come? I would love to tell everyone so we can all just swing for 2, 3, 4 weeks at a time and just capture the whole move, but we don't know yet. We've put in a couple of lows here on the NQ, which is the NASDAQ 100. Obviously, for anyone who's trading options, this also applies to you as well, just due to the fact that if you're trading things like Nvidia, things like AMD, Apple, Meta, Tesla, all of these stocks, you're trading the NASDAQ 100. That's what you're trading. If you're trading futures, then obviously you're trading NQ, you're trading MNQ, or you're trading the triple Qs. Doesn't really matter. It's all the same thing. It's all the same chart. So what we're looking at here is 2 weeks worth of distribution. So if in the last 2 weeks, you're getting stopped out more than normal, if in the last 2 weeks, your winners are not really running the way that you feel that they should run, if in the last 2 weeks you're getting into trades that look good and technically you should be into, and then you lose, this is why. Okay, the market is in a little bit of a battle between the bulls and the bears. If we just kind of look at the price action here from the 22nd of September, we didn't confirm any lower, we bounced. Anyone who took this long and held for any extended period of time got stopped out. The next day we confirmed short, which looked like follow through, and then it snapped back and it bounced. The next day never confirmed the previous day's high, and then it dropped and put a new low. You come into this day short on the 27th, you get short, and then it goes the other way. So the market is doing almost the opposite of what it should be doing because of that internal battle going on between buyers and sellers. Whatever the reason may be, interest rates, news, numbers, this, that, and the other, doesn't really fucking matter what the reason is. The idea that you need to get your heads around and kind of understand is that when you're in a period of distribution like this, you can come into the day with a short bias, 20 minutes off the bell, the market's running the other way. You can come into the day long bias, levels confirm, 1 hour later, we're going the opposite direction. Until we get out of this holding pattern, I would not expect any type of extended moves. I would not expect any type of serious money to be made other than a small scalp here, a small scalp there, trying to have enough discipline to stop out on the day when you're green. That's the first issue. So again, coming from September to October, completely different type of environment. So a lot of people who maybe found it easier to make money last month are finding it troublesome this month, or even towards that last week of September. So again, does it mean you're a bad trader? No. Does it mean you might get stopped out and lose more trades? 100%. That's taking care of that point. The second point that I want to make here is that a lot of traders, and I have no shame in saying it, but a lot of traders, even people inside this room, as much as you guys are trading on a day in and day out basis, you're showing up to the markets every day. In trading, that doesn't mean shit. On the outside civilian world, the regular 9-to-5 world, you put in your hours, you get a job done, you get paid. It's not the same rules applying to this type of business. I don't care if you sit here from fucking pre-market until the market closes. Doesn't mean you're going to make money. Just the more trades you take doesn't mean you're going to make money. If you lose money, doesn't mean that if you take 5 more trades, you're going to make that money back. That's the second thing. A lot of people think that showing up every day means that you're going to make money. Thinks that looking at the candlesticks every day, thinking you're learning something, means that you're actually learning. Learning means, what are your fucking mistakes and what are you doing to correct them? Okay, there's only a few mistakes that traders make on a day in and day out basis. Greed, over trading, right? Fear, panic, not taking trades, and then taking a bad trade later, right? So you identify the move, you don't take it. It does what you thought it was going to do, you take it later, you get stopped out. Those are issues that a lot of traders have. Cutting winners too quickly because you're in fear of giving back profits. The profits were never fucking yours to begin with. So if we snatch everything so fast, and then it goes in your favor, and then you try to take another trade and you get stopped out, whose fault is that? Is that the market's fault, or is that your fault? Not understanding when technical damage is done and you shouldn't be in a trade, or you shouldn't be taking a trade, right? All of these things are issues that a lot of traders are having, and I'm seeing a lot, obviously, because I work with a lot of people in this room, whether it be through public voice trading channel webinars, or DMs, or one-on-one calls. So I'm hearing a lot of the same issues. Another issue is everyone's sitting at their computer screens, their laptops, their cell phones, whatever it is that you use to trade. And as soon as the market opens, we want to take 10 fucking trades. Okay, and what's happening in a distribution period, we're not understanding that a gap down day doesn't mean continuation down. We're not understanding that a gap up or a green open doesn't mean continuation all day. So what's happening is traders are flooding into the markets as soon as the bell rings, taking the first move that they see, and then they're getting stopped out. And then they're trying to take the move short. Let's say, for example, they take the first move long, they get stopped out, and oh no, we're going down, so they try to go short, and guess what happens? It reverses after some consolidation and continues back up to the upside, or vice versa. So again, the level of patience that is needed to be involved in this type of business is high. The level of self-discipline that needs to be had in this business to actually really make money and feel like you know what you're doing and actually come into the markets with the level of comfort on a day in and day out basis is high. Okay, anyone can get lucky. Oh, this 5-minute candle's red, it's red, we're breaking this moving average, I got 5 points here, I'm gonna short it for a scalp, I make $300, cool. And then you do it again, you lose 500. You're not really taking anything that you're doing or learning and actually putting it to use. I'm going to give a quick example here. I'm going to give a quick example on the NQ on a 5-minute view. And again, if you're just listening, that's okay. A recording will be posted. You can just go to wherever I start talking about the 5-minute chart, looking at the NQ. Market opens at 6:30 Pacific Standard Time. All time zones that I talk on are going to be Pacific Standard Time, obviously. So if we look at the opening candle at 6:30 a.m., never takes out the high of the previous candle, no entry to the long side. And then the next candle at 6:35 briefly takes it out and then comes crashing down. So I can see one of two things happening here. I can see someone sitting on the long, taking the long and getting absolutely destroyed on the trade, and then not taking the short position because they just got destroyed, watching it run down 125 points. Or I can see someone missing the first trade altogether and then now chasing it somewhere down here. You're oversized too big, it quickly bounces against you and you stop out only to see it go down low. So if we look at this point, if we look at the point that I'm trying to make here, there was no 20 play long off the bell because the candle sets up at 6:25 a.m., which is in the pre-market, and the next candle never confirms it. For me, this has to be invalidated and I need a new setup to happen. Now again, am I a perfect trader? Am I someone who's going to sit here and say that I've never taken a continuation on a 20 play 3, 4, 5 candles later? Of course not. But ideally, what you want to see have happen is once your play sets up, you want the next candle to confirm. Okay, it's normally the next candle that confirms is when you have the greater chance of success and probability. So if we look at, for example, this 6:35 candle, I talked to a couple of traders today who took this short position, and I'm going to use the drawing tool here and hopefully it shows up on the screen. But a lot of traders are going to see this 20 play here. This is your max pain stop loss. This is a big candle, so this is going to be an extravagant stop loss here. You can also use the 20 SMA as your hard stop as well. Use it as a max pain. You get in on the 640 candle. It quickly wicks down, and as it starts to wick up, you take the profits off. Okay, because you're green. You don't want to lose them. Okay, so you get in on a perfect entry, and you see it go down, and then it starts to come up and you take them off because you don't want to lose the money that you made. Well, I'm here to tell you that if this trade confirmed and just wicked down here for 2 seconds and then came back up, guess what's going to happen anyways? You're going to get stopped out. So why the fuck are we taking profits just because we wick down and we're wicking back up and we're giving away imaginary profits that were never ours to begin with? When there's no technical damage being done, and technical damage being done means, for one, it's not over your 1 bar stop. For 2, we're still trading below the 20. So why are we trying to quick scalp this and take profits? Because you know what happens is you quick scalp this move and then you say, okay, if it breaks the new low of day, I'm going to get in. But guess what? This candle here, yes, even though it does confirm and goes lower, how many times have you taken a new low break and it goes down and then quickly going back against you? And then you panic because you think it's going to go back and you're going to give away all your profits. And then you stop out, giving away the first trade, and you do it over and 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 over again. The point I'm trying to make is that if this is a 20 play here, right? If this is a 20 play short, this is your max pain. If you want to tighten up the max pain, you use a stop over the 20 SMA. And you get into this candle, you use the 5 SMA as your trailing stop. You want to know why your losses are bigger than your wins? Is because you're trying to quick scalp when you see green, but then you're holding your stop losses to where they're supposed to be stopped out. You're never actually letting your winners win. You're never actually letting the trade go to full potential. So you let your stop losses go to full potential, but you never let your winners go to full potential.
That's right.
So there's 2 things that you can do in this particular situation, okay? And it's going to come down to the trader, and it's going to come down to your position sizing. I feel like I'm hammering this position sizing topic into everyone's head over and over and over, and no one's listening. The point I'm trying to make is that it feels really good when you scalp for 500, but it sucks when you scalp and lose 900. It feels really good when you get into a trade and it works and you make 300 on it. and the next trade stops you out for 600 or stops you out for 280, and you do that over and over and over, all you're doing is chopping yourself up. You're never really letting the actual trade work to its full potential. This game is very simple. What's not simple is managing your own internal emotions, your own internal mind, your own internal instincts. Your instincts as a trader are on fight or flight mode from the time you enter a trade to the time you exit a trade. There's so many traders that would rather, fuck this, I'm going to just lose this trade and let it go all the way and stop me out, because you know what? That's the easy thing to do, right? You get into a trade, you want it to work, you've already made some money, maybe you lost some money, and it starts going against you. Instead of just fucking saying, stop it, I'm just going to stop trading, I'm still green here on the day, I could still get out at break even, you say fuck it and you let it go, and boom, all the way until it kicks you out completely. And the reason why you do that, the reason why we do that as humans, is because as soon as we know we're stopped out and we've blown an account, given away all the gains that we had on the day, is because your mind mentally resets itself at that point in time. Because it's easier to say, fuck it, boom, I'm out of this, there's nothing more I can do, than to actually have the self-discipline to actually stop yourself out where you're supposed to, or actually stop trading on the day when you're supposed to. So the point I'm making is that if you're oversized on this particular 20 play here, when you start to move down, I'll just give two references. Let's say you're trading 10 micro contracts or 5 micro contracts. I don't really care. I'll do two examples here. I'll do two examples, one for micro traders, one for mini traders. Okay. So what I'm going to do is, if we get into this trade correctly, 881 on the NQ futures off the 635 candle is a confirmed 20 play short. Everyone that is in my room should have taken this trade. Okay. And if you didn't take this trade, you have to ask yourself the question, why? And if you're not taking it at 880, you're not taking it at 881, fuck, you're not taking it at 878. The question is why? The question becomes, what the fuck are you looking at? What are you waiting for? And what have you actually learned, and why are you not practicing what you're learning? Okay. So let's assume that we get into this trade, because we should have been into this trade short, and it comes down from, I'm going to call it 880, and it wicks all the way down to 855. So we're talking about a 30-point move in a matter of 5 minutes. Now, the problem is that, let's say you're trading 5 micro contracts and you get a 30-point move. Okay. 30 points is going to be $60 a contract times 5. You're looking at a $200 to $300 winner, depending on slippage, depending on the price of the fluctuation of the stock, moving up and down, moving up and down. At any point in time, you would have been up, let's call it 180 to 280. And the problem that you have is that you see it go up to $180 in profit, and then now it's 160, and now it's 140, and now it's 120, and I might lose all this money. I'm gonna stop. Whew, I won. I made $100. Beautiful. 5 minutes later, it continues to drop another 10 points. And 10 minutes later, it drops another 20 points. And 10 minutes later, it drops another 25, 30 points. And you got out here because you watched it go to 180 and then down to $80 in the green. And you didn't want to lose it, which it was never yours anyways, because you thought you were outsmarting the market. You thought you were outsmarting technical analysis, and technical analysis proved to you that you had no fucking reason to exit the trade until all the way here at 800 on this candle that closes over the 5 SMA. So this 20 play here should have ran and stopped you out down 80 points in your favor. Do the math on 80 points on whatever your position sizing is. There's no stress involved in this trade other than the fucking mental stress you put on yourself. Well, what about here when we were trading over the 5 SMA? We didn't fucking close above it. Well, what about here when it looked like a reversal candlestick? We didn't fucking close above it. Well, what about here? That's a perfect stop. Okay. Now, again, this is if you're a complete rock, right? A complete rock where you want to identify one thing, you want to let it do another thing, and you want to technically get stopped out on your own, right? There's no thought process that goes into this trade. There was no thought process. It closed below the 20. There's your level. Here's your entry candle. You fucking sit in it until it closes over the 5. There was nothing to do there other than to sit in it. Okay. So now let's say you like the profits and then we start bouncing into the 5 SMA and you take profits here. Then you better fucking be okay with calling it a day there. Okay. So if you do take profits here, when we started to bounce green and then maybe this is a reversal candlestick, okay, I'm going to get out 847 at the high wick. I'm going to give everyone the benefit of the doubt and say that you panicked at the high wick here. From let's call it 850. From 850 to 880 is a 30-point move. So do the math on a 30-point move in your position sizing. That's the bare minimum that you should have taken off this trade, was 30 points. Now, if you took those 30 points and you tell yourself, well, I'm going to take the new low of day. Although this one works, I can go over and I can find 20 more trades that don't work. So what happens is someone goes up 30 points, they go up 200, 300, 1,000. I don't care what you go up. You go up that much money, you get into this next one, it wicks down and then comes back and stops you out. And then you lose money. And now you gave away all those profits because you don't have the discipline to stop trading here. And you don't have the tolerance to hold to full potential down here. So what happens is you get stuck in this rut, identifying a great trade and taking profits here because you're in fear of losing money that you never had. And then you watch the trade go down. So you start forcing new entries. And then it stops you out. And then, oh, this is a reversal candlestick. I'm down. I'm going to make money. And then it stops you out, right? Because like I've said many times on the live streams, that yes, this candle here is a reversal candlestick. And if it gets over this 5 SMA, has potential to run. But it's not a for sure thing. No trade is. Nobody knew that this trade was going to go down 80 points. Okay? Just like no one knew that this trade is going to get stopped out here. Okay, so what I'm trying to say is that the majority of traders are shooting themselves in the foot because they're making the same fucking mistakes on a day in and day out basis. And those mistakes that are being made are easily fixable if you allow yourself to come to terms with the mistakes that you're making. The mistakes that I'm seeing right now, my losses are a lot bigger than my wins. My losses are a lot bigger than my wins. Well, why is that? Why are our losses much more bigger than our wins? I sat back and I've been sitting back for a week thinking about this. I've been doing this for a long time. I take big losses as well. I took a $750, $800 loss off of NVIDIA, the first trade of the day, came back. If anyone reads the gold chat, I got back into it off of a bounce, was using a low of day as my stop. And I said clearly, I'm in this trade until it fucking stops me out or I take my money. There is no in-betweens. There's no in-betweens because at that point in time, if I have a defined risk level, I have to let the trade play out. And I sat in that trade for a fucking hour, down almost $900 in the trade at one point in time. But I'm not going to panic. I'm not going to get scared. I assumed the risk when I got into the trade. And when you assume the risk when you get into the trade, you have to see it through, whether for worse or for good. There is no in between. So when people see people on social media and they post these big gains, you have no idea how much drawdown they sat in. You have no idea how much size they put on the table. You have no idea what was going on every second, every tick, every candle when they were in that trade. All you see is the profitability. And you think that it's easy to do that based on what you've seen or based on, yes, I understand this strategy. And then when you actually get called and the coach calls your name to go in the game, you fold, you're crumbling. And then when you lose, you're looking for pity and you're looking for sympathy, and it's the market and I'm losing all this money and I can't figure it out. I'm winning at 80% of the time, but my losses are bigger than my losers. I wonder why. Because for every loss that I take, I seem to always find one that gets it all back. And I seem to always find another that somehow puts me into the green. I wonder why. Are you truly maximizing the wins? And if you're not truly maximizing the wins, you will never get ahead. Now, back to the position sizing thing, because this is super fucking important. Especially when you're in the beginning stages, especially when you're building a foundation, and especially when you're trying to grow an account, whether it's personal, prop, or whatever, doesn't really matter. So in the beginning stages, when you're trying to grow an account, again, personal, or trying to get funded or newly funded through a prop firm, you really cannot have a huge position size on the table. I don't care if you took a scalp and you made $300 and then, you know, you took another one, you made $400. I'm going to bet $1 million that when you go into a period, a string of losses, or you take a loss and then you overtrade, you're going to give it all back and some. You're not going to be in the game that long if you're oversized. Here's another example. On the option side of things, you start off trading 2 options contracts. Your losses are anywhere between 50, I'm just using examples, and $150, okay? Depending on what contract you're playing. So you're doing pretty well. You're taking 10 trades, you're taking 15 trades, you took 20 trades, you took 30 trades. You know what? Maybe you're not substantially growing your account at a crazy rate that's going to impress and set the world on fucking fire. But you know what? You've got some level of success. Either you're scratch even or you're up a little bit, and then you say, I'm pretty comfortable. And you go from 2, okay? You go from 2 contracts to now 6 contracts, or even 5 contracts. So you double your size. And the next trade you take happens to be a loser, and it's not a $50 loss anymore. It's not a $150 loss anymore. This loss becomes $350 to $600. This is a huge jump from what you were just playing. It has nothing to do with your strategy. It has nothing to do with the market. It has nothing to do with anything. The game didn't change. You're still playing the same game. The only thing that changes is your position sizing. And when you changed your position sizing, you probably changed it too quickly, or you're starting out with a position size that is too big for your personal comfortability, for your emotional pain tolerance. So when you take this $350 or $600 loss, depending, you cannot fathom that. You cannot swallow that. And this psychologically eats you up. Because now you're thinking, well, if I lose one more, I'm down 1,000. I only have, $2,000 into my account. I can't lose too much. And now what that does is create a problem when you want to take a good setup, because you don't have enough money to sit there and take one more loss. And then what happens is you hesitate on pulling the trigger on a beautiful setup that you potentially could have made money on, but you're scared of losing because you've been taking losses that are too big, and your winners are not 300. They're not 600. Your winners are 100. Well, why are your winners 100 or 150? Because you're snatching profits too quickly, and those winners are never even being allowed the opportunity to actually win. because I'm going to make a point here on the Qs, on the NASDAQ. This trade, 20 place short, there's no money to be taken here. This is not a winning trade. This is a 5-minute move. We need at least 2 to 3 pushes lower, I would say, in my personal opinion. To truly call it a winning trade, it's got to be 2 or 3 pushes lower or higher, depending on the side that you're playing. This would be considered push 1, push 2, push 3. You shouldn't even be thinking about taking profits until 2 or 3 pushes lower. Because if you just get in on the confirmation, you take the scalp, well, guess what happens when you lose a trade? It's going to come all the way up here. That's more than 1, 2 pushes higher. So what I'm saying is that you take these baby scalps, you get stopped out up here, you're constantly like a dog chasing its tail, round and around and around. And yeah, you might get lucky and win 2, 3, 4 winning trades in a row where you kind of take these scalps and you win, you win, you win. But guess what happens? Here comes that one losing trade, and it takes away the whole fucking thing you just been working on for the last 2 days, for the last week. One trade can wipe out a week's worth of gains. One losing day where you go off the rails can destroy everything you've done for a month. So position sizing is very important. You have to, and again, when I started trading, the person who taught me how to trade made me trade 1 share. And maybe I made 80 cents, maybe I made $1, maybe I made 25 cents. And when I lost, it was the same amount of money, more or less. Of course, I'm not doing anything. But what I'm doing is, if you lose $1, do you care if you lose $1? No. Do you care if you win $1? No. What are we trying to focus on? My winners winning to full potential or getting stopped out where technical damage is being done? So how are you able to, I'll use Tesla as an example because I practiced on Tesla for a long time, trading 1 share. How am I able to take $1 on Tesla, $2 on Tesla, $3 on Tesla, like no problem, and take a $2, $3 loss on Tesla, no problem, allowing the trade to work out, because I don't emotionally give a shit about the $2 or $3 that I'm potentially making or losing. How come I'm able to make money paper trading, but I can't make money when I go to the real thing? Because technically you're allowing yourself to see if your strategy works and test it and hold these trades longer and maybe play bigger size or maybe do things you don't normally do when you're playing with real money or when something valid is on the line, such as a prop firm account or real cash. It's very easy when you have no emotional connection or attachment to what's going on. So if you play 1 share and you let your strategy work, for example, and you take money here and you made $3, for example, I'm just using a generic example. You made $3 here, or you were going to play it out until you should have technically gotten stopped out, which would be somewhere up here. You don't really care. So you're able to hold it longer until full potential or getting stopped out. Now, when you're playing with real money and you're sized too big for what you can emotionally handle, then when you go green, you want to take the profits right away because I gotta make that money. I can't allow it to give everything back. But then when you're getting stopped out, you're letting it run you to full stop out, which was a lot more than this little baby move that you took. Like, so for me, what I'm saying is this baby move here, although it was 20, 30 points, is nothing. It's nothing. I want more. 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 This is getting a little bit worrisome. I've taken enough off the market. I can choose to get out here. I can choose to get out here. I can choose to get out here. I'm not forced to get out there. So there's a big difference. Now, if you're trading for a prop firm, I'm going to say it once again. You cannot trade mini contracts with a high level of success if you only have $2,000 or $3,000 worth of drawdown. I'm not saying it's impossible, but what I am saying is you can't be in this move the whole way. It's too much risk, especially if you're using Apex, where every uptick is going to throw your trailing threshold down. You will slowly chew yourself up over time and never pass. Now, if you're on Top Step, it's a little bit different.
Yeah, with 3,000, what could you be on? Like, where's a good level with the 3,000? Let's, I know you're like, typically in my head, what I would think is should be like 1 minute micro.
Not like with 3,000. With 3,000,
good level for 3,000.
With 3,000, I would play no more than 4 or 5 micros at a time.
And with 1,000,
with the 1,000, you should probably be playing honestly no more than 2, and that is even pushing it.
Yeah.
Because of the fact this, if you're playing anything more on a 3,000 than like 5, 6, 7 micros or even 1 mini, legitimately, and I know because I've done it. Okay, this is what I've done. Recently I bought a handful of these 90% off Apex evals. I've made $500 a trade, $1,000 a trade. I went up 1,100, and I said, okay, let me put on 3 minis. I put on 3 minis. I got into a valid setup, and then it started going down 500, 600, 800. I'm like, what the fuck? I'm looking at it, and I'm like, okay, let me cut the trade here. Well, I'm down 800, and I'm looking at the candlestick, and I'm looking at the pattern, and I'm like, holy shit, this move hasn't gone up or down. I got into the trade, it was valid, and then all it did was it didn't even take out the previous candle, didn't close over anything. I'm like, fuck, I just lost 30 points, but on three minis, I'm down like 800 bucks. So the wins feel fucking great because you can get in on that same move and be up 800, but the odds of you being able to do that day in, day out with the high level of success, passing, getting funded, and staying there, taking multiple payouts is fucking slim to none. Now, you can do 2 things. You can go buy 20 accounts, right? You can go buy 20 accounts, max out your size, 30, 40, 50 micros like I did that one day. I mean, I was playing like 50 micros at a time, getting in, whatever. You can go do that and go pass them. But when you're funded, you cannot do that. You just can't. You will blow yourself up in a week, 2 weeks max. Because one trade can go against you 20 points like that. So even if you're playing 1 micro, that's like 500 bucks, 20 points, 500 bucks. You are like, it's like gone. It's like 500, 600. It's like so fast, right? It's like so fast when realistically the move didn't even do anything yet to be like, this trade really stopped me out. But if you were trading 2 micros, the trade goes against you 20 points. You're only down, 60, 70 bucks. It's manageable. It's manageable because just, even if this 20 play was taken on, let's say a $3,000 drawdown, you have 5 minis, you're playing max size. Okay. The most drawdown you would have been in was from 881 to 883, 884. I'll just say 884. So the most drawdown you would have been in was like 4 points. Not a big deal at all. You would have been able to stomach that, hold the move. And if you would have stopped out over the 5 for 80 points, that's 80 points times 2 because it's $2 whatever, right? So you're looking at $150 a contract times 5 is close to what? A $700 to $750 win. So yeah, that's how managing those micros, you can still pull $300, $400, $500 because there's no chance in hell that I'm ever going to sit in a losing trade against me $80 or 80 points. I'm never going to lose $750 on a trade. It's impossible. But with a mini contract or multiple minis or 10 micros or 15 micros or 20, it's entirely possible because even just to sit through the move to see if it's going to even be allowed to work, you might be down $500, $600, $700. And that emotional stress level, even if you take 2 losses, you're done. Like, you're done. You take 2 losses, you're done. That's $1,500 worth of drawdown. You got a trailing threshold. You don't really have much more opportunities to kind of, you need your trades to really work. It kind of messes with your emotional level. I've said it before, and I'll say it again. The best way to approach the prop firms is anything over $100 to $200 profit on the day, stop. Anything over $200 on the day, loss, stop. Period. Come back the next day. Have multiple accounts. The idea would be 5+. Okay, that's the idea. 5+. You make $100 to $200 a day on 5 accounts. Average, you're looking at $1,000 a week, $4,000 a month. That's pretty good. Take some payouts, buy more, invest in a personal account, do whatever the fuck you need to do. The idea is to get the payouts. It's not about how much money we're actually making on a day in, day out basis. It's like, can we get the payouts, right? Like, can we get the payouts? Can I at least pay myself $500? Can I pay myself $1,000? Because what good is making $500 in a trade if we can't even pull out $500 in a month? So it means nothing. It means nothing to make, like, for me, it means nothing if I make $1,000 today, but I never see the payout. It means nothing if I make $1,000 on this one trade if I'm never going to pull out $1,000 from this account in a month. So why not take the full fucking month to make 1,000 and then pull 1,000 out? To me, that's more satisfying than trying to shoot for $500, $400 a trade every single day, and then but never actually getting that money makes no sense to me. So the only way to truly do that is small size, because you need to be able to sit in these moves. Like, you have to be able to sit in these moves. For example, I'm going to pull up another trade setup here, and I want to show everyone an example. There's a 20 SMA play here. Let's say randomly at 8:35 in the morning, you're looking at the NQ, you randomly take this 20 play setup that confirms you get in, and it goes from 14,770 all the way down after entry to 14,749. This is a 20-point drop in 5 minutes. So if we do the math, 20 points on one mini contract is how much of a loss? At 20, 25, whatever it is, a point, right? So 20 points is almost $400 or $500 loss. And then you're going to tell yourself, well, we close below the 20, we're below the 5. If this goes down, we're going to probably continue down. So you stop out. And then what happens 15 minutes later? It goes from your entry price of 770 all the way up to 792. You would have made 20 points. So because you're size too heavy, you stop out here and then you watch it go here. And here's another thing that happens. You're in the move here. You don't sell here. And then it pulls all the way back. And it starts wicking because at one point in time, this is below the 5. Well, I got to get out. You stop out. And then it continues higher. Another 20 points. There was no stop out here until here. So this move went to 808 from 770. 38 points. So what should have been a $750 to a $800, $900 trade trading one mini, what should have been, you know, a $200, $300 winner trading, you know, 4 micros, turned into probably a loser, followed by a chase, followed by another loser, followed by, oh no, we're going down, just to making you do all kinds of stupid shit is what I'm saying. That's the point that I'm trying to make. So the point that I'm trying to make is that we are doing stupid shit when you're in the trade because you're not giving it full potential. You're not even, whether you're sized incorrectly or not. I would rather sit through a trade and make $100 fucking dollars on this whole move, whatever that position sizing would be, than to get in on this trade and try to make $500 really quick. If this just goes up 10 points, I'm going to make 300. If this just goes up 10 ticks, I'm going to make, you know, 250. Instead of doing that and being so paranoid and so anxious, and then when you see it come back down against you, you have to stop out because you just can't stomach that loss. And then to only see it 10 minutes later go up 20 points is ridiculous. Why are we in a rush to make so much money? Why are we taking profits so quickly? Here's another play. 10:10 Pacific Standard Time. We get a close over the 20 SMA long. 805 is your entry. Here's what happens as soon as you get into the trade. It quickly goes up to 809. No one's taking profits there. I can guarantee you that. And it pulls back. Pulls back to 793 from an entry price of 805. Quickly got put down 10 plus points. So if you're trading too big, what's the mindset like? I gotta get out. I gotta get out. I was up $100. Now I'm down 300. I'll just take the loss here. I'll find the next setup. And look what the fuck happens to this trade. It literally goes all the way to here is your stop loss. Use the 5 SMA to trail your entry. If you're going to get in here, you sit in the trade until it closes under the 5. That price was 861 from an entry price of 804. 55 points in a matter of 10:10 all the way to 11:20. You would have been in this trade for an hour and a half. So you're in the trade for an hour and a half and you took 50 plus points. Do the math, right? Even if you're trading micros, do the math. If you're trading 2 micros and you get 50 points, that's 100 points a contract. That's $200 in 1 hour. If you're trading 3, it's 300. If you're trading 4, it's 400. 5, it's like 450, 500. You know? If you're trading 1 mini, it's close to like $700, $800, $900. I don't know. You got to do the math on it. You know, depending on where exactly you take it, how much slippage they actually slipped us when we got into the trade and when we actually closed it out. But give or take, you guys can see the point that I'm trying to make here. Now, what happens is we take this 20 play, it wicks up and it comes down. Even if you have the balls and the stomach to sit through this, new high. Oh, I'm out. I'm out. I'm out. That was good. Nice, nice, nice. I'm out. Took 8 points, took 9 points, took 10 points. And the next trade you take, short over here, stops you out and you lose double. So it's not that your winners are smaller than your losers. It's your emotions are outweighing what should be allowed to let happen. That's the point I'm making. If your winners are smaller than your losers, you're not allowing the trade to work to full potential.
I'm gonna do 3 micros tomorrow. Are you gonna be on the chats tomorrow?
I'll be on the chats tomorrow. With 3 micros, you can pull $300-$400 out of this market easy. Easy, easy, easy. That should be not a goal, but if you hit over 250 trading 3 micros, I would stop. If you felt like you took enough trades in the morning and maybe you lost a couple, you won a couple and you're up $100, 150, I would stop. Because the whole goal is this. How much money have you pulled from the prop firms? Payouts.
Nothing.
Nothing. So would we be opposed to maybe trying to just pull $1,000 this month? We just started October.
Mm-hmm.
Let's get our first 1,000. Let's go buy 10 more. Let's go buy 10 more accounts next month when they run another stupid 90% sale, and then we take them for another $1,000 on a couple more contracts. Now we're at 2,000 or 3,000, and then in 6 months, that's how you slowly build it up. Trust me, I've done it before. You know, like the last Top Step account that I had, I ran them to 10,000, just cashed it out like this. Just run their asses. Cash them out, but you have to do it slow. You have to do it slow. They want you to do it fast. They want you to go make $800 a trade, because the next trade you lose, you're gonna blow it up. And that's what.
I was just like, I was frustrated for me because I'm like, man, this guy went and did a $3,000 prop firm in 1 day. I've been doing this thing for like 2 months.
Yeah. Yeah. And then I came back the next day and I did it on Top Step. I don't know if I posted that one. It was like $3,300 on Top Step.
See, but how come I can't do that with you?
Dude, you're not even trading all day, man. You're gone. Like, you're gone. Like, that is those, I'm doing that all day. In and out, in and out, in and out, in and out. All day. That's not the first hour. That's not the first 30 minutes. It's not the first trade off the day. That's sitting there picking it off here, 200, picking off here. Oh, down 80. Fuck it. Got to get out of this one. Oh, down 200. Oh, and here's 500 here. It's every play. Look at the, I'm going to quickly show this. I'm going to quickly show this.
I can't see it. I'm on my phone.
Okay, that's fine.
That you've been showing.
Okay, that's fine. That's fine. If I use today as an example, the 635 short, that was a beautiful trade. There was a bottoming out period here where I'm looking at a 20 play long at around 830, would have taken that. There's a 20 play long again at 1010, I would have taken that. There's a 20 play short at 1215, I would have taken that. There was another one at 1250, would have taken that as well. So I'm taking all of those trades. I'm taking this high of day break here over 831. That's a for sure trade. I'm taking the low of day break here from the after hour sessions at 850. There's another trade there. There's multiple trades. When I made the $3,000 in the day, I took 35 fucking trades, right? 35 trades. So what I'm saying is that there's
was that 35 trades on one like one prop firm?
One prop firm, one account. Yeah. 35 trades. I mean, if that's what needs to be done, but again, I'm also maxed size though as well. So it's not like I'm just taking one trade and I'm getting 60 points off of it. No, that's taking like 5 minis and taking $800 a trade. You get it? So I'm losing along the way as well. Hence, 35 fucking trades. If I'm taking 400, 500 a trade, if I would have won every single one of those trades, of course I would have made fucking 15, 20,000. I'm losing trades as well, but I'm taking the setups as they come. So again, it's all about how much do you want to risk, because there's two ways to do it. Like, I don't really care about these prop firms because I don't make my living off prop firms. I use it as fucking cash flow. I took out 2,000 or whatever, I took out 1,500, took out 3,000, whatever. Like right now I'm gonna sit on this Top Step $3,300 profit until the end of the fucking month, and then I'm gonna take half of it because they only let you take half. So I'm gonna take half of that. The other Apex 2 that I'm working on, one gets funded. I gotta wait the fucking 7 days or whatever still. That'll get cleared on next Monday. But the one that I have now, currently, it's just sitting with $900 in it. I'm gonna take that out, then I'm gonna try to double that and take 2 from that, or 1,500. I don't really care. An extra $2,000 or $3,000 from those 2 accounts because I don't really care about them. The options is where I make my bread and butter. Everyone kind of knows that already. That's what I've been doing. But so there's a couple ways to look at it. If you do want to do the prop firm thing where that's your full income, like how options is my full-time income, again, I'm not saying you guys quit your jobs, keep your jobs, but what I'm saying is if you want to make all your money from futures, you can't do that where you're trying to make $2,000 or $3,000 in a day. It sounds fucking nice because, again, like I just said, I went out and I bought 5 Apexes. I've blown 3 of them already trying to do the same thing. But I want to see how that works. And it only works when you have a great day. Like if it's a great trending day. If the day's not trending and the trade setups aren't there, blow, blow, blow. But it's $15, $15, $15. I lost $45. I lose more than $45 on a single fucking options trade, so why not go and fucking blow $45 trying to pass 3 accounts, right? But the first one that I did that with that type of mentality, I passed. So I'm 1 for 4, right? 1 for 4 on the pass rate, and I'm technically down $60 because it's $15 a pop, $16 a pop with the 90% off sale. So I've lost 45. The $15 that I used, that I passed one, is still in the books, but I'm down a total of quote unquote $60, but I'll have 1 funded account off the $60. That's another way to look at doing the prop firms. However, you cannot take that same mentality. You can't take that same mentality in it when you're funded. You know what I'm saying? You can't take that same mentality in when you're funded, because you do that when you're funded, trying to make the quick 1,000, 2,000, 3,000, you're going to blow it in a week. It's a guarantee. It's a guarantee. So
would you just recommend then just to keep doing like, let's say 3-5 micros or whatever.
Yes.
5 micros.
Yes.
And then just
Yes.
stacking.
Yes, because because that's what's gonna train. That's what's gonna keep you in the business. Doing the stupid shit that I did to pass like that, that's a way to do it. Like there's people that do that because they look at the evaluations as just throwaway money, anyways, right? So you go put in $300 and you go buy fucking 15 accounts. Whether you blow fucking 90% of them and you pass 3 of them, well, guess what? When you get to the 3 fundeds, you better trade them differently because you're going to lose them just as quick, right? So it was a complete waste of time doing it that way. Anyways, if you do it the slow, the slow, steady way, like that, I try to tell people, trade 2, 3, 4 micros at a time to make $100, stop on a day. Do the math. You're still going to pass them in 30 days anyways, 40 days max, 45 days. Even if you average, like, if you average $120 and you stopped on the day and there's 22 trading days in the month, that's $2,600. So you're on pace to pass an eval or pass the eval, whether you're trading Top Step or Apex. You pass the Apex in 30 days and you're almost there to passing Top Step as well. So what I'm saying is that's $120 a day, dude. $120 a day average. Some days you're going to make 50, some days you're going to make 300. I'm saying if you average $120 a day, 120, whatever it is, $120 a day times 22 days is $2,600 per account. So imagine if you have 3 accounts times 3 is $7,900, making an average of $120 a day. So what is the mindset?
You can only pull 50% of that every month, right? So if you're making, let's say, $8,000, you can only pull $4,000 a month.
With Top Step, yeah. With Apex, it's $1,500 or whatever the fucking account size you have. $1,500 every 2 weeks or whatever, between the first and the 5th and the 20th and 25th. But yeah, so again, even if you, okay, so divide it by 2, you take half, it's still $3,900 that one did not have before. You know, times 12 months in a year is $47,000.
Yeah.
And that's $120 a day, dude. But the thing is that people and traders, and myself included, everyone along the way does not see it that way. We see that we can make $1,000 on one trade. So we think that we can do that every single day, but it's not realistic, and the market will keep showing you that it's not realistic. It's going to give you a little piece and it takes it right back from you. It's going to give you a little piece and it takes it right back from you. This trade today off the open at 635 should have been a one and done trade. Again, I mean, you want to trade 3 micros? Okay, 880 was your entry. I don't even see an exit until at least 793. And maybe someone got scared here at 846. I'll just, I mean, again, no one's perfect, you know, myself including. Let's just say 880 to 848. It's 30 points, 3 micros. That's almost $300, $250 in 25 minutes. You're done.
All right.
Come back tomorrow.
I'm going to be there tomorrow. I'm going to fish the micro.
Use the 5 SMA as your trailing stop. If you get into a 5-minute 20 SMA plate, use the 5 SMA as your trailing stop. It closes above it. That's your technical reason to get out for profit or loss. Doesn't matter. Follow that system and you're going to do fine.
If it closes above it on a short?
If it closes above the 5 SMA on a short, you're out. If it closes below it on a long, you're out.
Can you text me that? I'll probably put it. I can kind of get dyslexic sometimes.
Yeah, I'll write it out and I'll post it for everybody.
Sounds good. Thank you, bro.
All right,
man. You guys have a good night, Dylan.
All right. To round out this video, again, because a lot of people are having a lot of problems in the markets right now, is the market is in a period of distribution. Last 2 weeks we're going sideways. Just to recap what I was talking about in the beginning of the video, the market is going sideways. If you pull up the NQ chart and you realistically look at the daily candlesticks, and you really see what is going on internally in this market, from the last drastic drop where a lot of people were making a lot of money because there's continuation, the plays are easy until we hit the last week of September, the 22nd. We start up, down. It looks like it's going short, confirms, comes right back up. Looks like it's going short, comes back up. Looks like we're going long, comes right back down. It's going sideways. Trades are getting stopped early. Whatever first move of the day is happening, it's getting reversed. When the futures are down in the pre-market, they're washing out and they're going right back up to the upside. People are taking that short, they're getting slammed. People right now, when the market is green in the pre-market and we set up over the pre-market highs, or the first initial move that looks like it should go, is getting slammed. It's not to say that, oh, well, do I have to wait for the second move? No, because you're going to have a day where it does go where it should go and you're going to miss out on a great trade. But the point I'm making is that you have to assume that this is going to happen more until this market gets out of this period that it's in. And we're not going to get out of this period that we're in until we reclaim the daily 20 SMA and get over this 15,100 level, or we start to close below 14,580 on the NQ. That's the range we're playing at, and that's the game that we're playing until we get out of that particular holding pattern. So the only thing one can do right now is to size all the way down. And even if you're working on sizing up, or you're working on a foundation, is not the time where you're increasing size here when you're not maximizing your winners to full potential. So that's why the wins will be bigger than, or the wins will be smaller than the losses right now, because we're not maximizing the wins because we're concerned about the losses. When realistically, we should let the technicals tell us when to get out, and technicals tell us when to get in. Now, I can recap a trade that I took today myself off the open, which was a big loser. And then I came back and took a humongous win on the NQ. So if we look at NVIDIA, this wants to cooperate with me. If we look at NVIDIA off the open, okay, we look at the pre-market highs being here, right? We look at the first 5-minute candle, sets up a 20 SMA play. Next candle at 635 confirms, goes from a price of 444 all the way up to 444.92, goes up 70-80 cents, and immediately slams my dick in the dirt, right? So immediately I'm getting slammed down for $750, $850, give or take, on my position size. Forces me to get out of the trade. Now the long position that I came back on was a 715, nope, 750 here. So didn't take this one, which probably would have been a winner. However, didn't take that. Took this one and said specifically in the Discord, using low of day as a stop until I take fucking profits or I get stopped out on a new close low of day. Now the thought process behind that is simple. Okay, thought process behind that is simple. So if we look at this again, this video will be posted to everyone in the room later if you guys are just listening. If we look at the 750 candle here, if my low of day is here at 438 and I entry here is at 442, this is a 4-point stop. Okay, it's a 4-point stop. But this is also a big daddy stock. So I can't risk 50 cents. I can't risk $1 on this big daddy stock. I've already pulled down once. We've already bounced once. We've got rejected at the high of day twice. But this pullback was a higher low, because this next pullback never took out the day's low. So as we start to consolidate, we get into this trade at 755, and immediately after getting in again, it's deja vu. It immediately comes back down. And at one point in time, I was down $600 on this particular trade as well. But if the thought process is, if I don't put in a new low, where's the stock going? I don't care how long it goes sideways. If it's not making a new low of day, The only other thing it can do besides go sideways is go higher. So I'm going to hold this. And most people would start to sell here when we get to high of day, because now they're green and now they're comfortable. Or they don't sell there, and as it starts to pull back, and they take profits here. So this is a small win, right? This is a small win. But if my stop loss was here, and I had no intention of ever getting out of the trade until we made a new low, then why the fuck would I get out just because we're pulling back? Because I'm scared of giving away profits? I already fucking lost today to start the day. So I have to respect the technicals, and I have to respect the uptrend, and just hold the damn thing. Just hold the damn thing, right? So you have to maximize the wins with the mentality of what you're thinking when you're going into the trade. Now, if you're going into this trade with a mentality where you want to scalp it, and the moment it doesn't do what you wanted it to do, you're fucked as a trader. You're emotionally screwed as a trader, because you had an idea that if the stock does this, it's going to produce this outcome. And when it doesn't produce that outcome, your brain fries. Now you're emotional. Now you're stopping out when you should. Or when you're going green, you're just quickly taking profits. So you have to understand and identify, what is the thought process going into the trade? If it's scalp, you're pretty much doomed, right? You're pretty much doomed on this particular setup. And the reason why I say on this particular setup is because this setup is in the middle of a range. It's not doing anything, right? The price of the stock, since putting in these highs and putting in these lows, right, is not doing anything. So if I'm going to take this setup, I need what to happen? I need the low to be broken to get out, or I need the high to be taken out for continuation. I don't care what it's doing in between. This means nothing to me. I don't care how much you're down here, and I don't care how much you're up here. Until we break the highs or until we break the lows, there's nothing to be done. And that's what people are failing to realize off the open when that first hour high is getting set, which is here, right? First hour highs is here. And first hour lows is here. So now that the first hour highs and lows are set, that's the day's range. So if I'm going to take a trade in the middle of a range, I can only be stopped out when we break the bottom if I'm long. And I can only start to look to take profits when we break the day's high range. So the first time that you could have thought about taking profits was here when we break the day's range. And even that, from entry, from 442 would have been 445. It's 3 points. That's the first spot you could have thought about taking profits. Because your stop loss has to be the low of day. It has to be the first hour lows. And you can't even think about taking profits until we break the top of the range. And if you take profits before that, you better be sufficient enough to stop trading on the day altogether, because when this thing does run another $4 or $5, you're going to be chasing it at a different level, which you should have never chased it at. So the thought process is, if you can take some profits here when we do break the range, and now you hold the runner, guess what? The runners are stress-free. It doesn't matter if this thing falls all the way back down. You've already made money on it, and the worst you can do is break even at this point. So you just hold the trade, and you hold the trade, and you hold the trade, and you hold the trade. If we give this the thought process of 3 areas to manage your trade on a potential long on my particular setup, if this is my reason why candle, my hard stop loss becomes a 1 bar stop, right? My max pain, which is I've got to get the fuck out of this before I get killed, is the day's low. So if my hard stop or wanting to take a hard stop is my 1 bar stop, and all I'm doing is sitting in the trade until I can take money or get stopped out, I never got close to stopping out once from a 1 bar stop below the entry, and never came remotely close to the low of day that we put in. But I'll tell you what I had to endure for almost an hour, being down $500-600 here, being down almost $800 at this point, being profitable here at around this point, maybe $300 or $400, to giving it all back and now being down $300 or $400. I had to stomach that for an hour. But how the hell can I get out if I haven't taken out my stop? How the hell can I get out if I haven't taken out the high of the day, or at least even tested the high of the day? There's only two things that can happen. I can't just get out when it goes green, and I can't just get out when it comes back down against me. Well, what about here when it closed below the 20? It means nothing to me because my 1 bar stop is here. It means nothing to me because the low of day is here. That's only relevant off the open. It's only relevant when you're super extended away. It has nothing to do when you're inside the range. When you're inside the range, only two things can happen. We go to the top of the range and get rejected and come back down, or you lose the bottom of the range and then we come back up and get rejected and continue to go back down. So the point that I'm trying to make here is that you cannot even stomach the losses or the wins if you're size too heavy and you're size too aggressive. It feels really good to make $300 a trade. It feels really good to make, you know, $250 a trade. But if you can't stomach holding to full potential on a trade, your losses will always be bigger than your wins, regardless. And there's nothing you can do about this first trade. So for me, what do I tell myself? There's nothing I can do about this. It was valid. It's over pre-market. It's a confirmed 20 play that had space to go. I can't do nothing about this stopping me out. So I have to suck it up, take the loss, and look for the next trade. And if this is a trade that is going to stop someone out for the day, then oh well, then you come back tomorrow and you look for another setup again tomorrow. But if people take a big loss like this, right? Like this was a big loss for myself this morning on the video. If I take this big loss and I haven't been making any money on my wins because I don't let them ride to full potential, then I can only take a few of these natural causes, is what I call them, before I'm out of the game. So if I'm constantly getting into plays, like even if this play worked a little bit and I snatched profits up here, and then the next trade I took was a big loss, this was all for nothing anyways, right? So again, you have to really look at, are you allowing the trades to really work in your favor at all? Because even if we look at 20 plays that are valid, right? 20 plays that are valid. This short setup was valid. This would have also been a big loser here between 439.60 and 438.80s. I mean, it's a dollar move. I don't know if anyone would have taken that, but this could have been a big loss here. But then how about this long position over 443 using a 1 bar stop at 440? It's a $3 move. Like, do we understand that Nvidia right now is between $2 and $3 stop loss? So even on this 20 play here, you were in here, you could have taken profits there. If you didn't, it pulled all the way back. And the problem that happens is this is what happens. People get into this move here, they don't take any profits up here, it pulls all the way back, they stop themselves out, market trades sideways for an hour, and then just continues to run all day. And it's like, what the fuck did I do wrong? Here I am again taking a big loss off of what seemed like a good play, but realistically, was it a good play? Was it a good play? Or did you try to be smarter than the market? Or did you try to be smarter than what's really going on? Because what's really going on here is that you're still over your 1 bar stop. And this is just a pullback and hasn't even taken out the low of day. I mean, that's the way the market needs to be looked at. The moving averages are guides. The 20 SMA is a change in trend for short-term movements. So when we go over the 20 SMA, that's telling us we have a short-term trend potentially setting up to the other side. That has nothing to do with the range of the day. The range of the day is here. So if this is the range, right? If this is the range of the day as of this point in time, anything taken in between is just playing the middle of the ranges. So if you already know your range is up here, if you did take this 20 play, where are you taking profits? Into the top range. If you still are sitting through this play to the long side and you're sitting through it to the downside here, yeah, maybe you were up a few $100 on this play, but should you realistically be stopped out here? Well, the argument could be, well, it closed below the 20, but it never took out your 1 bar stop. But it closed below the 20, and what if it did? It never took out low of day. Well, if I'd let it do that, then I probably would be down double. That's what you signed up for when you got involved in this business. The problem that people are having right now is they want to get into this play and they just want to see it work from the jump. It doesn't work that way. You want to get into this play here and you just want it to work. It doesn't work that way. Even your winning trades are going to put you in drawdown. Even your winning trades might be 30 minutes before they pop. Even your winning trades, the best of them, are going to take more than 5 minutes. So if we're having a problem as a whole, because it's multiple people in this room and multiple people that I'm seeing on the social media platforms that can't seem to get their feet under them because they're losing more than they're winning. But why are you losing more than you're winning? On your winners, are you going back? How much more room was in that winner, to the long side or to the short side? You know, the only way that you can truly scalp like this move, take money and be done, is if you're playing huge size and it works. And then you stop trading on the day. That's it. You come back tomorrow and you try to do it again. But if you get in on this play and then you take your loss way down here, which is valid, that's a valid loss. This is a valid failed move, right? So if we take this loss here, then there's only two things that can happen. Either we have to hang it up for the day, come back tomorrow, or we can look for that next opportunity. But our next opportunity can't just be a small scalp for a little bit of money. Any play long taken today on the video after the low of day was set should have been held all day, because you already knew where the fucking max pain was at. The max pain was at our low of day. So I don't care if you're up 200 here, 300 here. I don't care if you're down here again. I don't care if you're flat here. I don't care. The max, the take profit is not until we break the opening range and we start to really trade above it. And in my opinion, someone should, if you're in NVIDIA, you should still be holding at least one today, because it did nothing to ever get you out all day long. If you look at where we closed at the top of the range. Well, what if I would have gave back these profits? I don't care. Doesn't really, like, it doesn't really matter. It's a winner. Look at the fucking daily chart. So if you look at the daily chart, does it mean it has to go up? No, of course not. This thing can pull back the way the market is trading, right? But if we start taking out today's high of 449, this thing's coming to 452, and over that, it's just going to absolutely explode. 10 to 15 points. So you have to know where you're at in the daily chart. Where are you at in the daily chart? Did we take out the previous day high? Well, the previous day high in the video was 441. So if we're trading over the previous day high, 441 got taken out in the pre-market here. 441. So look at this line. It's the previous day high. In the pre-market, we reclaim the previous day high, then we lose it, then we try to reclaim it. We set in the high of day here, first hour opening range, right? First hour opening range is here. First hour opening low is here. All being traded right at yesterday's high. So look at the most choppy action on the video is being traded right at previous day's high. We go up over it, we come back down, we lose it, we come over it, we lose it, we reclaim it, put in a new high, get rejected. Look at where this next one comes down to. This next one comes down right into where? Previous day high. It creates the higher low. and then runs all day. You have to know where you're at in the cycle. You have to know where you're at on the chart from the daily standpoint all the way down. But the thing is that when you're oversized, this pullback here puts you down $200, $300, $400, $500, $800, and you can't stomach it. So what needs to happen is you have to play with the level of size that you can be able to stand it. You know, okay, I'm going to make a very valid point and I'm going to end this video. You have to either play stocks, right? You have to play names, whether you're trading options or futures, it doesn't really matter. You have to play with position sizing. And this is going to be the end point to my video, to be able to hold a move here all the way down to here, and you don't give a fuck. Because if you get into a move here and all this little baby pullback here scares you, you have too much size on. And if the answer is, well, the contracts are $700, if it comes all the way down here and I lose 70%, I'm going to lose 500. If you're concerned about losing $500 on one contract on NVIDIA, you can't play NVIDIA. If you're concerned about losing $500 trading Tesla or any one of the big movers, Meta, I don't care what they are, you can't trade it. Go trade Apple. Go trade AMD. Go trade Roblox. Go trade DraftKings. Go trade something else. Go trade PayPal, Square, anything else. Because everyone loves to make big moves on NVIDIA, but they can't fucking handle the downwards moves. So this is how you figure out position sizing. Can't hold the move from the opening range high to the opening range low. You can't play the stock. If one options contract on NVIDIA costs $700 and you can't lose $700 on your trade, you can't play the stock. It goes the same thing with the futures. If, like, for example, the futures today were up at one point in time, you know, the futures can be up 100, 200, right? At the NASDAQ. Oh, fuck, the day's already done. But if you look at the NASDAQ from high to low swing, here's the open, 925 all the way down to 716. We're talking about 200 points. 200 points. So if you trade one micro and you're down 200 points on the NASDAQ, that's $400. If you're trading two, that's $800. The point I'm making is that if you can't even see yourself losing that, your size too heavy. Now, of course, you're not going to be down 200 points on the NASDAQ. You're going to have a stop loss maybe at 30 points, maybe at 20 points. We're going to have a technical reason to never get blown out for 100+ points on the NASDAQ. Don't get me wrong. But what I'm saying is that if you can't play a stock where you can fathom holding it from high all the way down to low, you have too much size. And if you don't want to accept the fact you have too much size, too many contracts, then you're not doing this business correctly. Because let me say one thing. Let me say one thing. If we were playing, I'll choose Tesla because I play Tesla a lot. If we were playing Tesla, same kind of fucking setup as NVIDIA where it fakes everyone out over pre-market, confirms a 20 SMA play, and then gets destroyed, right? So the high of day on Tesla was 263. Okay, 263. The low of day on Tesla was 256. Okay. That's 7 points. $7 on Tesla, high to low swing, right? If you were trading one share and you bought at the tippy top and you sold at the tippy bottom, you lost $7. Do you care? I want you to think about that. Do you give a fuck if you bought at the tippy top and you sold at the tippy bottom for $7 loss on one share? Do you care? The answer is no. You're not going to care. But if you're playing 5 contracts, you're playing 10 contracts, do you want to hold it down $7? Of course not. So if you're playing one contract on Tesla that, let's say, costs $300 or $400, well, then the most you can lose is $300 or $400 playing one contract, right? Are you okay with losing $300? If the answer is no, you can't play Tesla. Because the most you can lose is 300. I need to see what the damn options are trading at before I start talking out of my ass. So anywhere between $500 and $700. So $500 or $700. Let's take the middle. Let's say $600. Are you okay with losing $600 on a trade? And again, I'm going to make a very valid point, because it's not going to go to fucking zero today, but you can lose 50 or 60% of it, right? So if a contract costs $600 to play one Tesla contract, and you could potentially lose 50 to 60% of that contract on any given trade, are you okay with losing $300? If you're not, you can't play Tesla. And if you're not, you fucking better believe your ass you cannot play 3 contracts of Tesla. You can't be in this thing for $2,000 and one bad trade take you out 50%, and you can't lose $1,000 on it. How is that possible? How is that possible? But you want to make 800. You want to make 500. You're in one contract, you want to make 200. You're taking profits at $25, $30, but then your losses is $200. How? How? Because you're not letting the trades work in your favor. The short setup that came quickly after the Tesla destroyed the longs off the open was 260, and within 5 minutes it went all the way down to 258.17. It went down $2 in 5 minutes. If you use the same thought process as getting out when we close over the 5 SMA, bounces, sinks, 257, 83, 260. I mean, if no one took $2.50 off this move, we got fucking problems. But if it starts to come back up here and it starts to close over this 5 SMA, 258, 260 again, 259.20, you would have still taken $1 off the move. $1 off the move. If you didn't take any of the $2 down here, you still took $1. Manage the trade. Short setup confirms. If you're not happy with these profits, that's fine. This bounce, you don't give a shit about because it's still below the 5 and the 20. New low. Are you comfortable with profits? No. Okay. Sit in it. Bouncing. Sit in it. Bouncing. Sit in it. Close over the 5. I've got to get out. For whatever this is, profit, I've got to get out now. It is what it is. I've got to get out. Moral of my story, guys. The losses are bigger than the wins. If you're having trouble identifying the setups, you have to understand where we're at in the market cycle. We're in a period of distribution. The market has not done anything. Yes, are some stocks going up every day? Are some stocks going down every day? Yes. Is the market going anywhere? No, it has not gone anywhere for 2 fucking weeks. It's going up one day, it's going down the next day. It's going down one day, it's coming right back up the next day. The market's not doing anything. So if your P&L is fluctuating, your P&L is down, what is the overall market doing? The only ones making money right now are people who are holding trades longer through the bullshit. They're holding those high to low swings. Remember what I said, if you're going to play one options contract at Tesla at 550 and you can't stomach being down $400 in the trade, $300 down in the trade, shouldn't really probably be in the trade, right? But the only people who are making money are the people who are down holding through that because we haven't taken out the days low or days high, and then finally it's coming back in their favor. Or people who are scalping 10, 15, 20, 30 contracts at a time. They're getting in, they're taking the quick dollar move down, and they're just calling it a day, kind of stopping, understanding that they need to stop on the day. It is what it is. Any questions after I post this video, you guys can definitely DM me. You guys can definitely hit me up in a channel. Doesn't really matter. But we have to understand, guys, that once we get into trades, we hold them to full potential or we get stopped out. There is no in between. The only in between that happens is if you take profits, you better be comfortable with those profits to not take another trade. That doesn't mean, okay, I cut profits here early on Tesla. Let me run my happy ass to Amazon. Amazon's moving. Oh, took a loss on Amazon. Oh, let me go to NVIDIA. NVIDIA is doing this. Oh, I make a little bit of money. I'll take small profits on NVIDIA. Okay, now I'm up a little bit. Let me go over to AMD. take a trade on AMD and get smashed and give everything back. So you took 4 trades, you realistically didn't do anything, you just got smashed along the way. If you're going to take profits before full potential, meaning technical reason of damage getting out of the charts, you better be okay with stopping on the day and coming back tomorrow. I'm green. Okay, it was a small trade. That's fine. I'll come back tomorrow. It is what it is.